to our pre-2020 method of withholding. Okay, so the W-4, if you recall, that W-4 form that's used at the federal level for 2020 and later it's a lot longer. It's a whole sheet, and it asks some different questions as well. This is the and many of you are probably familiar with this form if you had a job before 2020. This is the form you would have filled out. Remember, we had 5 filing statuses on the new form. Now we really only have 2, just like Iowa. We've got single or married, and then there's a third category that's married but withhold at the single rate. Single rate withholding is higher than married rate withholding. So for individuals who are married but they want additional amounts withheld, that is one of their options, is to check this, that yes, they're married, but they want an additional amount of withholding from their paycheck. Now, so you've only got 3 options there. Line 5, again, I'm not going to go through those, that's just the address. Line 5, number of allowances you're claiming. Okay, so just like Iowa, we're talking about allowances now, and I'll show you how those are calculated at the federal level. Just like with the, does anybody remember those 4 factors that we needed in order to calculate withholding at for 2020 and later W-4s? Remember those 4 factors? We had, I'll start you out, frequency of pay, what else did we need to know? Taxable wages, filing status, and the checkbox, right. Okay, so 2020 or later, 2019 and earlier, we also need 4 pieces of information. First 2 are the same, so that's convenient. So we also need to know the frequency of pay. Whoops, is that a Q? Quite sure. And taxable wages. Put these in a different color just to distinguish them. But there's 2 other pieces of information that we need that are different from these. We need to know, it's not very good. This one's better. That's better. We need to know marital status, which is different from filing status. Although they are related, because filing status is determined by marital status. Marital status and filing status are not the same thing. So marital status is easier, you're either married or you're not, right? Filing status, you've got that choice of 5 different filing statuses. Again, dependent upon what your marital status is, but you could be unmarried and you could have a child, which would give you head of household status. You could be unmarried, have a dependent child, and you're unmarried because you are a widow or a widower, and that would give you the qualifying widow or widower status. So there are a couple of additional options in there for unmarried individuals. You could also be married and filing separately, which we don't have that option up here. But marital status. And then the 4th one are allowances. Okay? So again, these 2 are the same, but we got 2 new concepts now that we have to, pieces of information that we have to gather. First one, we just get from this checkbox up here. Next one, I'll go through very similar to what they do on Iowa. with the allowances, and it's the same relationship. The higher the allowances, the lower the withholding will be, okay? Additional amount you want withheld from any paycheck, again, some flat amount. If you are exempt, same criteria for exemption for that 2020 and later W-4 form as well, but the individual just write exempt here. So there's actually a space for exempt. If you remember on that other W-4 form, there wasn't really a space for it. You're just supposed to write it kind of down toward the bottom before you actually sign it. And then the employee signs the form. This is it. This is it. So now we've got that big long form, the whole sheet. Before it was just this, it was like 1/3 of the page. Now, determining the allowances though can take some calculation. And there are worksheets attached that help you to determine how many allowances you can claim. So this page 3, 1 for yourself, so you get 1 allowance just for you. 1 if you're married filing jointly, so that would be 2 if you're there. 1 if you'll file as head of household, so you wouldn't be entering a 1 here and here because you're only going to file as 1 filing status. 1 if you're single, married filing separately, have only 1 job. So anyway, this whole worksheet takes you through to calculate if you get any additional allowances. Okay, so once you've gone through credit for other dependents, and you can see it's very similar to those allowances on Iowa. Any other credits as well. So, and there are separate worksheets that employees can use to determine whether or not they qualify for any of these additional credits or additional allowances, sorry. Now the good news is you really don't have to know all the details of how these allowances are calculated because nobody's filling out this form anymore. Anybody who is a new employee or who has to fill out a new W-4 will not use this form. They have to use the new form. However, there are still employees here and there who have these older W-4 forms. They have had no need apparently to fill out a new one, even though they probably should have, but there was no requirement for individuals to fill out a new form. Now, I can imagine that maybe in the next couple of years, they'll just make it a requirement that everybody has to switch over to the new form. But right now that requirement doesn't exist, and that's the whole reason that we have to go through this, because the calculation of withholding is different, even though these forms aren't really used anymore. Again, I'm not going to go through all of these individual worksheets, but all of these have to do with calculating how many allowances an individual is going to claim. And I'll show you how those allowances play in. So for our case, let's just say we have a single individual who has claimed 2 allowances, no additional amount, okay? So we've got, and I'll show you how these, like I said, I'll show you how these allowances work. So single allowance is 2, let's say they're paid bi-weekly, and their taxable wages are $2,000. I'll show you how this works. We are going to need, in order to calculate this, we are going to need our, where to go, our 15T. The same one. We're going to use the same publication that we used for the earlier calculations. We're going to use the same one because remember, we had several different chapters here. We had wage bracket method, 2020 or later, percentage method, 2020 or later. We also have wage bracket for 2019 or earlier, and percentage method for 2019 or earlier. So just like the earlier calculations that we did, we've got 2 different options here, and just like those, we have a table that we could use, which is super easy, right? But if we can't use the table, we then have to do those calculations manually. So let's look at the table first. So again, you're gonna want the 2019 or earlier, and it's still called the wage bracket method. Now, there is a calculation for determining the tentative withholding amount. Here, it's pretty simple, this worksheet, because all we're doing is using the table. So, just like with the earlier tables, we have the frequency of pay up at the top. Be careful that you make sure you're on the right frequency of pay. We also have, so married persons. Now remember, with the other table, it was really convenient. All of those filing statuses were on one sheet. We don't have that anymore, okay? So we have to find not only the correct pay frequency, we also have to find the correct marital status page, okay? So let's take a look here. And then I'll talk about those numbers up at the top in just a second when we get to the right page. So we want bi-weekly single. Okay, here's bi-weekly married. You can see there's a lot of pages here. Bi-weekly single. All right. So we've got the right table. Just like with the other, we've got a wage range over here. These are taxable wages, so we would have subtracted any pre-tax deductions in order to arrive at that. Now, don't confuse it with Iowa, though, where we're subtracting the federal income tax. It's only with Iowa where we get to do that. Okay, we don't get to do that at the federal level. But we find our wage range. Up here at the top, let me get the right page. There we go, it's the right page. Up here at the top is the number of allowances claimed. Now you can see it starts at 0. You can claim 0 allowances at the federal level too. That gives you the most amount of withholding. It only goes up to 10. It is possible for individuals to have more than 10 allowances though. If they have more than 10 allowances, you've got to use the percentage method to do the calculation. Okay? If their income falls off of the table, you've got to use the percentage method to do the calculation. So if your information if you don't have enough rows, if you don't have enough columns, or you don't have enough rows, you've got to use the percentage method to do the calculation. But this way, I mean, it's pretty simple. So we're going to look, we've got 2 allowances, that means we're going to look at this column here, the second column, and we're going to find the income. 2,000 is between 1950 and 2030, so $174. Pretty simple. So again, be careful that you've got, because the other ones you're only looking at the pay frequency up here on these tables, but you've got to have the correct pay frequency and the correct marital status. Okay? So let's take a look at how we calculate using the allowances. So that's the percentage, or using the percentage method. We still need to know the number of allowances, but we've got an additional calculation that we have to do in the middle. Okay? Go back up to the table of contents here. All right. So with the percentage method, we have these, I don't even know what they call them exactly. Table 7, what do they refer to them as? Well, we've got an additional table here that we have to use. And you can see we've got amounts that correspond to pay frequency up here. What we're going to do is we're going to multiply the number of allowances by the appropriate number in this table, and we get to subtract that from our wages. So again, we're going to start with our taxable wages. So remember, our withholding here was $174. Over going to take taxable wages, and we have to subtract number of allowances times the table amount. Can't remember what they call it. Allowance table, we'll call it. Okay, so in this case, we've got 2,000 minus 2 times, it's bi-weekly, so 165. So 2,000 minus, what is it, 300 and, what do I have here? 320, 30, 330 equals 1670. Okay, so this step here is new, okay? We're gonna take that 1670, that's what we're gonna use to apply to the appropriate table here. This should look familiar. It's exactly like the tables that we used with the previous, the new method. So we're gonna we've gotta find the correct pay frequency, which is up at the top. So we're on bi-weekly. Oh, sorry. Bi-weekly's right here. And we have only 2 choices. Married on the left, single on the right. Remember with the other one, it was checkbox, no checkbox. We don't have any checkboxes here. There's no checkboxes to deal with in the old method. All right, so we are bi-weekly, single. So if the adjusted wage amount, this is the adjusted wage, okay? Taxable wage is so. Again, I don't know what that says, wage. So 1670 is our adjusted wage. We're gonna apply it to this table. For single people between 563 and 1774. Okay, so 3960 is our tentative amount. It's over here. And then we're gonna calculate 12% of the amount over 563. So 1670 minus 573 times 12%. I get 573, is that right? Is it 563? Times 12%. $132. Here, 84. And then we're going to add those two together. Slightly different, but I'm sorry, it's hard for you guys to see. That helps. 172.44 is the calculation I get using the table. 174 was from the table. Again, the reason for the difference is because that table has a wage range, whereas here we're using the exact amount. Should we do this again? It's almost exactly the same, remember, except you don't have to worry about the checkbox. You do have to be a little bit even more careful with the tables because the filing status is listed on them. And you've got to remember that, that allowance calculation. Let's do one more. I'm going to erase this so I can use it. semi-monthly pay. Taxable wages are $35.07. Why not? Marital status, married. And number of allowances, 5. So first thing, let's use the table to find out how much our withholding is. So again, gotta pick the right table. Be careful here, read it carefully. 2019 or earlier, wage bracket method. Find the right table. This is weekly, there are a lot of tables here. Bi-weekly. Bi-weekly, because we've got bi-weekly single, bi-weekly married. Okay, semi-monthly married, we're on the right table here. $35.07. Oh shoot, I picked too high an amount. Let's say $32.07, because I want it to be able, I want it to fit on both. $32.07. All right, so $32.07 is between $32.05 and $32.45. So here's the row we're going to look at. We're going to find the number of allowances, so 5 allowances, so this column here, so 197. All right. Now we're going to do it using the percentage method. Remember, we need this table. So we're going to take the number of allowances times the appropriate number based on the frequency of pay. That's what we're going to subtract from the taxable wages. So again, $35.07 minus, we have 179 times 5. So $895. $35.07 minus $895. $26.12. Okay, these are our adjusted wages. That's the amount we're going to apply to the tables. So $26.12. We've got a semi-monthly payroll period and we're married. So we're going to use this table here. Okay. So our adjusted wages, $26.12 falls between $13.98 and $4,023. That's the calculation we're going to use. So our tentative amount, $85.60. Let's put that over to the side. And then we'll do the calculation for the rest. So we're going to take our adjusted wages, $26.12 minus $13.98. And then we're going to multiply that by 12%. So 14. 145.68. And we're going to add this. What did I do wrong? Did something wrong. So I've got a calculation problem here somewhere. 85.60. What did I do wrong?
35.07 instead of the 32.07.
35, I'm sorry.
At the
Oh.
beginning. Yeah.
You're right. You're right. Okay, so this should have been 32.07 because I changed it. I didn't change it in my head. So, yes. So my adjusted wage amount is incorrect. Thank you. Yeah, call me on that right away. Maybe you didn't notice. 2312. Sorry. 2312 is our adjusted wages. So here 2312 times 12% minus 1398. 109.68. That's probably makes a little bit more sense. 491. Close. 194. Did I get that right? Yep. No, 5. Sorry. 528. Again, not exactly the same, because the table is a range. It's an income range of about $40. Questions?
Where did you get the 179 from again?
The 179.
When you multiplied it by the amount of allowances.
Oh,
Oh, yeah.
179. Right there's all for this table. So semi-monthly 179. Other questions? No? Okay. Do you like this chapter? You got to do some math. You got to do some calculations. All right, so what, if you don't have any more questions about this, what homework questions do you have? The last homework question? Do this.